Welcome back to Smart Income Masters, where we help you make money smarter.
Absolutely.
If you're new here, don't forget to hit that subscribe button
Yes.
so you don't miss out on future deep dives.
Exactly.
Today, we're tackling a question many beginners have.
Yeah.
How do I invest smartly without taking on too much risk?
Right.
We're going to dissect this investing guide for beginners and pull out the most valuable insights
Yeah.
to help you get started.
It's a great guide to start with
Yeah.
because it emphasizes the why behind investing, not just the how.
All right, so let's address the elephant in the room.
Okay.
Why should someone even bother investing?
Yeah.
Isn't it easier to just stick with traditional saving?
Well, saving is essential,
Yeah.
but investing can supercharge your financial goals.
Okay.
The guide highlights 3 key benefits that really resonated with me.
Okay.
First, it's about accelerating your wealth growth.
Okay.
Think of it this way.
Mm-hmm.
With saving, your money is sitting on the sidelines.
Right.
With investing, your money is actively participating in the game. Oh,
Potentially earning you a higher return over time.
okay. So it's about putting your money to work for you.
Exactly.
But isn't that where the risk comes in?
Risk is inherent in any investment,
Sure.
but smart investing is about understanding and managing that risk.
Right.
This guide wisely focuses on low-risk options suitable for beginners.
Okay.
And that brings us to the second benefit, achieving long-term goals.
Okay.
Whether it's buying a house, retiring comfortably, or funding your child's education,
Yeah.
investing can be the bridge between you and those dreams.
Right.
By starting early and letting your investments grow over time, you're essentially giving yourself a head start.
So it's like planting a seed and nurturing it over time to bear fruit.
I like that.
I like that analogy.
Yeah.
But what about the rising cost of living?
Boy,
Doesn't that erode the value of our savings?
that's a crucial point, and the guide addresses it head on.
Okay.
The third benefit of investing is beating inflation.
Okay.
Think about it. If your savings are growing at 2% annually.
But inflation is at 3%.
Right.
You're actually losing purchasing power over time.
Right.
Investing can help you stay ahead of that curve by potentially earning returns that outpace inflation.
Okay, so investing isn't just about making money.
Right.
It's about protecting the value of your hard-earned savings.
Exactly.
Now, the guide mentions various investment types.
Yeah.
It can be overwhelming for a beginner to navigate this landscape.
Sure.
Where should someone even start?
It's like walking into a grocery store with endless aisles.
Right.
You need a shopping list to stay focused.
Okay.
The guide provides that list by highlighting beginner-friendly, low-risk options.
Okay.
Let's dive into 2 of the most popular ones: index funds and ETFs,
Yeah.
and government bonds.
Those sound familiar, but I could use a refresher.
Sure.
What exactly are index funds and EPS?
Okay.
And why are they considered low risk?
They're both excellent tools for passive investing, which is essentially letting the market do the heavy lifting for you. Index funds and ETFs track a specific market index, like the S&P 500.
Right.
Instead of picking individual stocks, you're buying a basket of stocks that represent that index,
Okay.
providing instant diversification.
Okay, diversification. We hear that word a lot in investing.
Yeah.
Why is it so important, especially for beginners?
Imagine putting all your eggs in one basket
Right.
and that basket falls.
Oh, no.
That's what can happen if you invest heavily in just one company or sector.
Right.
Diversification is about spreading your risk.
Okay.
By investing in a broad range of companies through an index fund or ETF,
Right.
you're less susceptible to the ups and downs of any single stock.
Oh, okay.
If one company performs poorly, others can cushion the blow.
Right.
It's a safety net for your portfolio.
So it's like having a well-balanced meal instead of just eating one type of food all the time.
Exactly.
I like it.
And here's another bonus.
Okay.
Index funds and ETF typically have low fees compared to actively managed funds.
Okay.
That means you get to keep more of your returns.
Right. They're a cost-effective way to participate in the market's long-term growth potential.
That makes sense. Now let's talk about government bonds.
Okay.
Why are those considered a safe haven for investors?
Government bonds are essentially IOUs issued by the government.
Right.
When you buy a bond, you're lending money to the government,
Okay.
and they promise to pay you back with interest.
Okay.
What makes them so safe is that they're backed by the full faith and credit of the U.S. government.
So it's like having the government as your borrower.
Exactly.
That sounds pretty secure.
It's one of the safest investment options available.
Okay.
Government bonds provide a fixed interest rate,
Okay.
making them predictable and stable,
Right.
though their potential returns might be lower than stocks.
So it's a trade-off, lower risk, lower potential reward.
Exactly. It's about finding the right balance for your risk tolerance and investment goals.
Right.
And remember, even within the world of bonds,
Yeah.
there are different levels of risk and return.
For instance, Treasury bonds issued by the U.S. Treasury
Right.
are considered the safest,
Okay.
followed by municipal bonds issued by state and local governments.
Right.
The key is to do your research and choose the bonds that align with your needs and risk appetite.
That's a great point. It's not a one-size-fits-all approach.
Right.
Speaking of options, the guide also mentions a few other low-risk alternatives, right?
It does.
Let's quickly go through those before we move on to other asset classes.
Absolutely. The guide highlights high-yield savings accounts,
Okay.
certificates of deposit, CDs,
Okay.
and target date funds as additional low-risk options worth considering.
High-yield savings accounts sound pretty straightforward.
Yeah,
What's the catch?
they're exactly what they sound like.
Okay.
Savings accounts that offer a higher interest rate than traditional savings accounts.
Right.
They're FDIC insured, so your money is safe, and they provide easy access to your funds.
Okay.
However, the returns might not always keep pace with inflation, especially in a rising interest rate environment.
Right.
So while they're a great place to park your emergency fund or short-term savings,
Right.
they might not be the most effective tool for long-term wealth building.
Okay, so they're safe and accessible, but might not generate substantial growth.
Right.
What about CDs? Those are a bit more complex, right?
CDs offer a fixed interest rate for a specific term,
Okay.
typically ranging from a few months to several years.
Okay.
They're also FDIC insured,
Right.
providing peace of mind.
Okay.
The trade-off is that your money is locked in for that term.
Okay.
If you need to withdraw funds before maturity, you'll likely face penalties.
Right.
CDs can be a good option if you have a specific savings goal with a defined time frame,
Okay.
and you want to lock in a guaranteed interest rate.
Okay.
However, if interest rates rise during your CD term,
Yeah.
you might miss out on earning a higher return elsewhere.
So CDs are like a commitment. You're promising to keep your money there for a set period
Yeah.
in exchange for a guaranteed return.
Exactly.
Lastly, let's touch on target date funds.
Okay.
Those seem geared towards retirement planning, right?
That's their sweet spot.
Okay.
Target date funds are a type of mutual fund that automatically adjusts its asset allocation
Okay.
as you get closer to your chosen retirement date.
Okay.
They start with a higher allocation to stocks for growth potential
Right.
and gradually shift to a more conservative mix of bonds as retirement years.
Okay.
This hands-off approach can be appealing for investors who prefer not to actively manage their portfolio.
It's like having a financial autopilot for your retirement savings.
Exactly.
So we've covered a lot of ground just within low-risk investments.
We have.
It's clear there are many options available even for beginners.
Absolutely. And that's just the tip of the iceberg.
Right.
We'll delve into other asset classes in a
Right.
bit. But remember, the key is to start with a solid understanding of your risk tolerance,
Right.
financial goals, and investment time frame
Yeah.
that will guide you towards the options that best suit your needs.
Wise words. Let's take a quick break,
Okay.
and when we come back, we'll explore some more exciting investment avenues,
Sounds good.
including real estate and stocks.
Mhm.
Stay tuned.
Looking forward to it.
Welcome back to Smart Income Masters.
Okay.
We're dissecting this investing guide for beginners
Right.
and uncovering the gems that can help you make money smarter.
Absolutely.
Before the break, we talked about low-risk options like index funds and bonds.
Yeah.
Now, let's step into a realm that many find enticing: real estate.
Real estate has long been considered a wealth-building powerhouse, and for good reason.
Right.
It offers the potential for appreciation,
Right.
rental income, and tax advantages.
But the guide also acknowledges that it can be a complex beast,
Yeah.
especially for beginners.
Yeah, it can be.
It often requires significant capital, expertise in property management, and the ability to stomach market fluctuations.
Absolutely.
That's why the guide cleverly highlights alternative entry points for those who want exposure to real estate without the traditional hurdles.
Yeah.
It specifically mentions REITs and crowdfunding platforms as interesting options.
Yeah, those are good options.
REITs, those are real estate investment trusts.
Yes, exactly.
They sound familiar, but could you break them down for us?
Think of REITs as a way to invest in real estate without actually owning physical property.
Okay.
They're companies that own, operate, or finance income-producing real estate,
Right.
like shopping malls, office buildings,
Right.
or apartment complexes.
So instead of buying an entire apartment building,
Right,
you can buy shares in a REIT that owns multiple properties.
exactly.
Okay.
And REITs are legally required to distribute a significant portion of their taxable income to shareholders as dividends.
Okay.
This makes them attractive for investors seeking regular income.
Okay. So REITs offer diversification, potential appreciation,
Right.
and dividends. Sounds like a triple win.
It can be.
What about crowdfunding platforms?
Okay.
How do those work in the real estate space?
Crowdfunding platforms connect investors with real estate developers seeking funding for projects.
Okay.
They've democratized real estate investing,
Okay.
allowing individuals to participate in ventures that were once accessible only to institutional investors.
So it's like pooling your money with other investors to fund a development project,
Exactly.
essentially earning a share of the profits.
Precisely. Crowdfunding platforms offer various real estate investment opportunities,
Okay.
from residential and commercial properties
Okay.
to more specialized niches like senior housing or self-storage facilities.
Okay.
They've opened up a world of possibilities for investors with varying capital levels and risk appetites.
It's fascinating how technology is transforming traditional investment models.
Yes, it really is.
But the guide emphasizes something crucial about beginner real estate investing.
Yeah,
It's not just about jumping into the first shiny opportunity.
right.
That I think.
Absolutely. The guide's key takeaway here is that successful real estate investing, especially for beginners,
Yeah.
is more about asking the right questions.
Utilizing tech platforms for research and due diligence.
Right.
And educating yourself to make informed decisions.
So knowledge is power, even in the seemingly straightforward world of real estate. Makes sense.
Yeah, it is.
Now let's shift gears to another asset class that often sparks excitement and sometimes trepidation: stocks.
Stocks represent ownership in publicly traded companies.
Okay.
When you buy a share of stock, you're essentially becoming a part owner of that company,
Right.
with the potential to share in its profits and growth.
The stock market can seem like a roller coaster ride
Well,
with its daily ups and downs.
Yeah,
It's understandable why beginners might feel intimidated.
absolutely.
That's why the guide wisely focuses on 3 actionable tips for beginners
Okay.
who want to try their hand at individual stock investing.
Yeah, that's a good starting point.
The first tip is perhaps the most fundamental: invest in what you understand.
That's a really good point.
This seems like common sense, but it's easy to get caught up in the hype.
And chase after hot stocks without really grasping the underlying business.
You do want to do
That's a recipe for potential disaster.
Yeah.
The guide emphasizes that starting with companies whose products or services you use and understand
Right.
can give you a solid foundation.
Exactly.
You're more likely to do your research, follow the company's performance,
Right.
and make informed decisions based on knowledge, not speculation.
I agree with all of that.
So before diving into the financials,
Yeah.
start with a product or service. Do you use it?
Right.
Do you like it?
Right.
Does it make sense to you?
Yeah.
It's a great way to filter your investment universe.
Absolutely.
What's the second tip?
Diversification.
Okay.
It's a recurring theme for a reason.
Right.
Just like with index funds, diversifying your stock portfolio is crucial to manage risk.
Okay.
Instead of putting all your money in one company,
Right.
spread your investments across different industries,
Okay.
sectors, and even geographical regions.
So don't put all your eggs in one basket,
Right.
even if that basket looks incredibly appealing at the moment.
Exactly.
Diversification helps to cushion the blow if one company or sector underperforms.
It does.
It's about spreading your bets and reducing the impact of any single investment on your overall portfolio.
Right.
What's the third tip?
Patience.
Let me guess.
Patience.
You got it. The guide emphasizes the importance of thinking long-term when it comes to stock investing.
Yeah.
The stock market is inherently volatile.
Right.
There will be upswings and downswings, sometimes even within the same day.
It's easy to get caught up in the emotional roller coaster, especially when you see your portfolio value fluctuating.
Absolutely, and you don't want to do that.
That's why having a long-term perspective is crucial.
I agree.
Short-term market movements are often driven by speculation and sentiment,
Right.
but over the long run, fundamentals tend to prevail.
They do.
If you've invested in solid companies with strong growth potential,
Right.
riding out the market's inevitable bumps is usually the best strategy.
It is. It's about focusing on the marathon, not the sprint.
Yeah, I like that.
Now let's step into a realm that has garnered a lot of attention, but also generated its fair share of controversy.
Cryptocurrency.
Cryptocurrency is a digital or virtual currency that uses cryptography for security.
Okay.
It's decentralized, meaning it operates independently of a central bank or government control.
It's a fascinating concept,
It is.
but it's also a volatile and rapidly evolving landscape.
Yeah, it is.
The guide approaches cryptocurrency with a healthy dose of caution, especially for beginners.
That's wise.
While cryptocurrency offers potential rewards, it also comes with significant risks.
Absolutely.
The guide highlights two major warnings that every beginner should heed.
Okay.
The first is volatility.
Right.
Cryptocurrency prices are known for their wild swings driven by speculation,
Yeah.
regulatory news, and even social media trends. So it's not for the faint of heart.
No, it's not.
One day you could be up 50%, the next day down 30%. Buckle up for the ride, right?
Exactly.
The second warning is about scams and fraud.
The cryptocurrency world unfortunately attracts its share of bad actors.
It does.
Remember the FTX example we mentioned earlier? It serves as a stark reminder that even seemingly reputable platforms can collapse,
Right.
leaving investors with substantial losses.
A lot of people lost a lot of money.
It highlights the importance of due diligence and thorough research before investing in any cryptocurrency project.
Absolutely.
Don't just blindly follow the hype or trust promises of overnight riches.
Right.
Ask the right questions. Understand the technology
Yeah.
and be wary of red flags.
Good advice.
Solid advice. The guide wisely suggests that if you're considering dipping your toes into cryptocurrency,
Yeah,
start with small amounts that you're comfortable losing.
that's a smart approach.
Treat it as a high-risk, high-reward experiment rather than a core part of your investment portfolio.
I agree with that.
It's amazing how this investing guide for beginners manages to cover so much ground without feeling overwhelming.
Yeah, it's well written.
It even delves into topics like setting financial goals and creating a budget.
That's what makes it such a valuable resource for beginners. It emphasizes that investing isn't just about picking stocks or bonds.
Right.
It's about aligning your financial decisions with your overall life goals.
Right. It's like having a roadmap for your money.
Yeah,
You need to know where you want to go before you can figure out the best route to get there.
exactly.
The guide also stresses the importance of seeking professional advice when needed.
Absolutely. While this guide provides a great foundation, it's not a substitute for personalized financial advice. If you're feeling overwhelmed or unsure about certain investment choices,
Sure.
consulting with a qualified financial advisor can provide tailored guidance and peace of mind.
It's like having a co-pilot on your financial journey.
I like that.
They can help you navigate the complexities and make informed decisions that align with your risk tolerance and financial goals.
Absolutely.
So we've covered a lot of ground in this deep dive. From understanding the why behind investing to exploring various asset classes and resources for beginners.
A lot of good information.
We've dissected this investing guide for beginners and extracted the most valuable insights to help you embark on your investment journey with confidence.
Hopefully that's what we did.
Remember, investing isn't just for the wealthy or financially savvy. It's a powerful tool that can help anyone achieve their financial dreams,
Right.
whether it's buying a home, retiring comfortably, or simply securing their financial future.
Absolutely.
And the key takeaway from this guide is that smart investing starts with education, understanding your risk tolerance, and making informed decisions that align with your individual goals.
Yeah, very important.
It's about taking control of your finances and making your money work smarter, not harder.
Make money smarter.
Make money smarter. So to circle back to our earlier question, what single action will you take this week to kickstart your investing journey?
What will it be?
Will you research index funds, dive into NerdWallet's resources, or maybe even schedule a consultation with a financial advisor? Every journey begins with a single step.
I agree.
And remember, we're here to support you every step of the way. Hit that subscribe button for more deep dives into the world of personal finance and investing. Until next time, keep learning, keep exploring, and never stop striving to make money smarter.
Couldn't have said it better myself.